So in this video, I'm going to be diving into my portfolio or just going in a little more in depth and kind of at least explaining the objective. As I've mentioned previously, I don't really recommend imitating this portfolio and what I'm doing. I'm not a financial advisor. I don't really think this portfolio is inherently high risk, but it's not the way that I would primarily recommend most people to be just trying to grow their wealth. This is just a portfolio I've created for fun, kind of tailored to my goals and risk tolerances, or at least a goal that I've kind of set for it. Um, at least that's what I'm attempting to do, as anytime with investment, there's risk involved. Even though you might set a certain goal or risk tolerance, it's nothing's guaranteed in investing. You never know what the market's going to do. So going through my portfolio here, I have a portfolio primarily oriented towards dividend paying companies. Now, the goal of my portfolio isn't to chase the highest dividend payers. I'm just trying to avoid companies or funds that I believe have excessively high dividend payouts ratios in relation to their earnings, or that utilize strategies that could result in large downside risk. Most of my companies I have in the portfolio, they're fairly moderate dividend payers. I'd say a little on the higher side, but nothing that I'm super worried about. A couple of these REITs have a little higher dividend payout ratios, but that's just typical for REITs. Um, most of the time, these companies, I don't feel like there's any excessive risk. Nintendo actually is one that has a fairly lower dividend payout, but that's kind of a special case. I included in my portfolio. I'm going to cover each kind of stock selection a bit more in separate videos, just kind of explain the rationale a little more. As of now, I haven't really looked too much into covered call ETFs or any kind of that related stuff. I'm sticking to equities. I'm not ruling like a covered call ETF out in the future, but that's an area I need to do some more research on and just decide if it's something that would make sense in my portfolio. The main focus of my portfolio is to try and produce stable growing income, but at like a decent yield. I don't want it to just be a super low yielding portfolio and really without any loss or degradation of the initial investment. So I don't want to pick something that I think's a yield trap and the company is really just going to fall apart, have to cut the dividend later in the future. So as far as why I chose the dividend approach, that's just the objective I set for the portfolio. I just want to generate stable income. I don't really have any need for the cash flow. That's just kind of a topic for the portfolio I picked. I'm quite a bit away from retirement, but regardless, I just thought it would be kind of fun to create an income focused portfolio. I'm going to cover, like I said, an analysis and my take on dividends and more growth oriented investing in a future video. I'm not saying one strategy is better than the other. I have more growth oriented investments and other accounts. Your strategy may be different just based on your goals, risk tolerance, and tax implications, just depending on your overall situation. Now, as I mentioned, I'll go through and explain each of my positions, the rationale for them being in my portfolio in separate videos. This is just my initial portfolio, and I can guarantee there's going to be some turnover and shifting stuff around. My goal is to post a video within a week anytime I buy or sell a new position, and then explain the rationale for my decision. As previously mentioned, my criteria for these positions is dividend paying companies. Now, what I've chosen to do here is prioritize stocks and ETFs with yields within roughly like a 3 to 4% range. Most of these do fall within that range. There's certainly going to be exceptions though. So, like these dividend ETFs, like SCHD, that 3.91%, SPHD, it shows is a little higher, but it actually is a little lower. That 30-day yield can actually vary a bit depending on like a static price that is utilizing to calculate that yield, the most recent dividend payout. There's some weird stuff that can go into the calculations, which I'll probably cover in a separate video. But my goal is to be in the 3 to 4% range. Some of these, like the REITs, are actually going to be a bit on the higher end. That's just due to the nature of REITs. REITs tend to probably be closer in the 4 to 6% range, at least in the current interest rate environment we're in right now. And then I'm going to have certain positions like Nintendo that has a lower yield, but just due to the goals of the portfolio, this probably won't occur a ton. But when I do have a position with a lower yield, there is likely going to be some factors such as dividend growth, company earnings projected to experience strong growth, some reason why I am holding that in my portfolio regardless of the lower yield. Um, as far as turnover in the portfolio, I'll typically sell out of a position either if the company is performing really poorly and I don't see a turnaround on the horizon, as well as if there's an element of risk or uncertainty that I'm just really not comfortable with. I just might sell out of the position. Another reason I may sell a position is if the value goes up significantly and puts the yield of the position way out of the range that I would like to be at in relation to the portfolio. I'm not going to instantly sell something if it goes up in value a little bit, but if the stock ran up by 50% and it didn't really look like the dividend was going to increase that much, there really just wasn't really any underlying incentives, in my opinion, to keep holding on to the stock. I might just look at locking in some gains and rolling the funds into something else. But that's it for this video. Thanks for watching, and let me know if you have any questions.